Hi guys, and welcome back. This is going to be a quick video on some advanced options trading strategies. So here today I entered into a vertical bull spread on Starbucks. As you can see here, we sold to open Starbucks 5th of January 2018 at the 59 strike put options. So we sold those at 0.68 cents, and we bought the 5th of January 18th 58 puts at 0.18. So we got a credit here and a debit there of 0.5. So it has 2 days to expire here, and we'll just pull up the Analyze tab. So as you can see here, we're sitting in the money here. We're looking for a move higher. This is IWM, so we'll pull up Starbucks here. So we're looking for a move up to 59 here. So this expires on Friday when the markets close. You want to exit the trade before then so you don't get assigned option contracts. In the meantime here, we're sitting at roughly $60 profit, which isn't too bad for a one-day move. And if we go back to the chart here, we can see our entry here, which was just based off of this. So we see our entry signal candle here. We got in halfway as soon as it crossed up here. We could see a better entry down here as it crosses up the RSI here, and we're going to see a slight overturn here. You can see a squeeze forming here, so we know something was going to happen. It looked like it was just basing out here, and we capitalized on the pop-up here. So we ended the day plus 1.87% up, and I'll just show you how we construct the vertical option spread for this. So if we look here and we go to trade and we type in our ticker Starbucks here, we got in the position here and here. So you can see they're trading 184 contracts and 240. It's a lot better to get into these than a thinnerly spread contract at 87. And you can see here we don't really have much hope of trading this when only one contract is traded here. So what we did is we sold a vertical. So just right click on it, click sold, and for the purpose of setting up the puts, if you want to say you expect it to decline, it's going to go from like 59 to 56, what you want to do is just right click and then go buy a vertical, and that will capitalize on as it's falling. If you want to capitalize on as it's rising here, so you say it's at, you believe it's at 58 and you think it's going to 60, you'll want to sell. So basically we're always doing it on the put side to capitalize on volatility. It's just easier if you construct it this way rather than messing with the call side, which is a different beast altogether. So we're just going to hit sell here, and you right click and go analyze trade, and we'll deselect our current trade that we have going on here. And as you can see, this will be right at the money here. So as it pushes up to 59, if we wanted to capitalize on it, basing on a contract, so on one contract you're looking at about $30 gain or 28 here, and then you're risking about 22 here. And that's generally what we're looking to do to construct these verticals here. You can fidget it with a bit, and you want to make sure it's in the most liquid section. So uncap this lock to see where it's going to currently be trading at. And this way, when you widen the spreads, you're going to have more of a profit basis. As you can see, it went up from 28 to about 40 there. So you can cut down your costs on the option contract itself and the commissions you'll be paying to your brokerage. And so if we subtract that up, you can see it pretty much scales. And this is why you don't want to be trading like in an area of one contract, because you're not going to get a fill. And even if you do get a fill, it's really hard to get out of the trade at that point. So say we scale it up to 20, and I mean that at which point you're making about 780. If it's pushing up to 59 here, and it expires in this range, because this is about the theta decay here. And if you know much about the Greeks, your theta decay is what you're trying to capitalize on a vertical spread. So as the days move up, say if we increase the day, so third, fourth, and then fifth, you can see how it starts shrinking over time here. Also, if you do unfortunately catch the down end wind, it's going to hurt you as well. But you want to just be monitoring your trades, so when it does hit a certain threshold, you're cutting your losses. And that's about going back to the charts here and just analyzing where your stop loss would be. So because I have this trailing ATR here, ATR stop with a modified 9 day moving average, so this will be my trailing stop here. And seeing it's below this pivot here, that's a good place to be stopped out in case the market does come against you, so you're not sucking all those losses, so you don't wake up Friday and just ending at max loss. And so we're hoping it stays around 59 up until Friday, seeing a nice push into the end of the week, and hopefully we can get max profits on that. And so through this way, you can see how using both the trading strategy and option verticals, you're able to maximize profits. Thank you. Have a good day. God bless.